And welcome out, Tackle Traders. This is the halftime report, January 22nd, 2020. It's still part of the new year. How long can you get to say Happy New Year? Because, I mean, it's still the new year.
Well, it depends, I guess, who you are. But I don't think Mark says Happy New Year on New Year. Like, I think he's, like, out at that point. I think after the first, 2 weeks. I'm going to go 2 weeks. Let's put a standard. January 15th, you got to stop saying it.
Oh, you've definitely entered.
Well, I can't say Happy New Year.
Yeah, you're in total nerd geek territory saying Happy New Year at this point. So, good luck. Good luck.
Happy New Year, everybody.
Although the other day in the chat, when people were talking about a punishment for Mark, I think the best one was one.
Oh, there's Cody going out.
Student said,
Yeah, the nerd and geek police
well, I'm
are
taking
like,
Timro.
Cody's playing his best Timro right there. I was like,
doing my best.
Cody, you just got it. If you're going to host, just play the role of Tim. And then Cody, within the first 5 minutes, has internet problems. So there you go. I'm going to start with this, guys. I think I need therapy. I really do.
I'm a therapist. I'm here to listen.
You're my therapist, Mark.
I'll be your therapist.
10 hours of those impeachment hearings yesterday. 10 hours.
God.
What would that say? Rub some dirt on it.
Rub some dirt on it and do it again. So I'm supposed to watch 10 more hours today. Is that what the therapist says?
Listen, anybody that watches 10 hours of the impeachment hearings is either a true American that cares about the process or sick, twisted, that loves to inflict pain upon themselves.
Can it be both?
I don't know. I think it's that sounds torturous. That sounds absolutely torturous.
Matt, I tried to turn it on. I couldn't get through the 5 minutes. I couldn't. The number of people they're all just talking points, and there's nothing.
It's a frustrating thing, but it's also, to me, I guess it's also a historical thing. And I just want to be as familiar with the process and the arguments as possible, so that my opinion is based on data and facts and not based on what somebody else said or somebody else read. And so I'd like to think I'm a good American that's participating in the political process, but it's probably more I just like a little bit of pain.
All right, question out there. Would you rather sit through 10 hours of the impeachment hearing or 10 hours of small talk at a neighborhood barbecue?
Oh, impeachment hearings, not even close.
I would. I'm not a small talk person. Like, I'm nice and friendly, but when it starts getting small talk, and after the third person's like, "Oh, so what do you do? Oh, that's interesting. Oh,
hey Mark, how you doing? How's the kids been? Yeah. Oh, getting some nice weather here.
So I think we're all admitting we would rather watch 10 hours of impeachment hearings than that at a communal barbecue where we have to play nice with people, right?
So here's the secret to getting through small talk at a barbecue. You be the person barbecuing. Be the cook. Because if you're on the grill,
I like it.
Then you're busy, you're running in and out. No one gets upset when you just pick up the spatula and randomly walk away.
Cody, that's a good Texan answer right there, buddy. It's a very good
looking meat there, Cody. I definitely want that piece over there. How you doing, Cody? You're stuck at the barbecue. Like, you're stuck.
I really regret what I started.
Go back inside
I really regret what I started. All right, guys, let's get back on track very quickly. Obviously, a little bit of a slow news day in the market today, but I want to start with kind of the conversation we had yesterday is kind of where I want to pick up here. Netflix reports earnings last night, and honestly, guys, fascinating conversation between Mark, Tim, and myself yesterday. And just to kind of give you some numbers, I want to get your take on this, Mark, because I think it's very, very important. Netflix beats top and bottom line in terms of their numbers. They reported a fantastic earnings per share number in $1.30 versus the expectation at 52 cents. Their revenue came in line at $5.5 billion with 5.4 on the expectation. But the news of the day is kind of this growing trend we're seeing in Netflix, and we'll break down the technical read here in a second. But it's kind of this growing trend. Netflix for the third consecutive quarter missed U.S. and Canadian forecast. And to give you a little bit of a number here, and this is what is concerning. They had 550,000 new subscribers in Canada. They had 420,000 new subscribers in the U.S. And you might think that's about 1 million new subscribers in North America. But the problem is just last year, guys, 4 quarters ago, that number was 1.75 million new subscribers. That has to be extremely concerning, especially given the fact the last two quarters they've missed on U.S. and Canadian subscriber growth. Now, in the international arena, they did add about 8 million new subscribers, which beat all the forecast. Mark, based on what we saw in terms of the numbers, the U.S. and Canadian subscriber growth, that really kind of plays in what you were talking about yesterday. If Netflix is going to be this growth company, and I loved what you said, it needs to grow. What's your read on just the numbers here, Mark?
Well, first of all you people in the chat yesterday who are like, yeah, Timmy, Netflix is cool. You forgot the number one rule of investing. I am never wrong. Like,
no.
Ever. All right. Netflix story. Hey, lots of positive things. Why is Netflix down today?
Mark, your pride is showing. You got to cover that back up.
Dude, it's not pride, it's math. It's math.
He's not
mathematics. It's just mathematics. That trend is continually going up. But it's like we were talking about yesterday. Like, you can have all of these great metrics, but if you are not growing in the United States, the investor class with money, not just your mom and pa investor that's like, oh, Netflix is cool, is extremely concerned about domestic growth, extremely concerned that there is this cap developing on Netflix potential with whether it's competing services or whatever it may be, and it's competing services. There's just seems to be this cap, and yesterday's earnings report only bolstered my argument, the things I was saying yesterday, and that is really, really held by a lot of people in the investing community, that Netflix, this really high PE company, is just not showing the domestic growth to warrant the type of fundamentals that it's showing. Yes, nice global growth. That's nice, but America is front and center. It's the home. It's the bulk of its revenues. And as long as that shows to have, and it does, it looks capped right now. It looks like this is kind of the general ballpark of where we might be with subscribers in the US. And that's extremely concerning from a 5, 10, 20-year projection. When you look at Netflix, when you look at the fundamentals, when you look at the PE ratio, when you look at the PEG ratio, when you look at whatever fundamental metric you want to look at, it's like, this is where I want to put my money. Like,
well, I guess when you're looking at that high valuation of Netflix, and I think let's see what the current PE ratio is right here. Going to the fundamental tab. It's got a current PE ratio right there at about 104 with a 5-year average of about 138. And I think, Mark, the concern is that the investors will pay a high valuation to get into a position that if a company is growing at 20 to 30% per year, right? I mean, Facebook had a high valuation for many years, but its subscriber growth was exceeding 20, 30% in revenues every single year. And that's just not what we're seeing in Netflix over the last year. We've seen, contraction from subscriber growth. And the international numbers have really been what has been holding Netflix up. My concern with the international numbers is Netflix enjoys this first to market type status, right? And, yes. And they've really enjoyed this first to market type status for the last 10 years. They were dominant in this space. They were the only player in this space from a domestic and an international perspective. They started moving into international 2-3 years ago pretty aggressively. What happens to those if the exact same thing plays out internationally that we've seen play out domestically over the last couple of years? What starts to happen when Disney Plus and Apple TV and these other, cheap micro subscription type entertainment products start getting into Europe to the same capacity that, they're in America right now? I mean, let's face reality, guys. Disney Plus only came to market, 3-4 months ago? Yeah. I mean, Apple TV only came to market 3-4 months ago. They're not in Europe right now. They're not in China right now. They're not in Japan right now. They're not in Australia and New Zealand. And, they're not in these areas of the market right now. I promise you, Disney, Apple, Amazon are all planning on going into those markets. So the question I have for the investors of Netflix is, if we're going to see that continuation play out, and in the numbers, Mark, there's no reason we're not going to see this. This is now 3 consecutives. You know, I remember the movie Major League. You guys remember the movie Major League?
Movie.
Right? And right, they won 2 in a row. It's like, that's not a streak. 3 in a row is a streak, right?
Mm-hmm.
A lot of times in the market, when you see negative data economically, or you see negative data from a fundamental perspective within an individual stock, the market will kind of just wipe that away, right? It's just one data point. You know, there's these multiple factors of that, what could have caused that one data point to be negative. But now that you have 3 consecutive quarters of really kind of the same data playing out, I think you got to be a little concerned. And, you know, when I saw what happened with Netflix, the initial response to the numbers, that 8 million global subscriber growth, really kind of, you saw this market really kind of, and you see the gray area here, that's the overnight action. You see it go up and up and up and up. And when I saw that occurring last night, I just came back to what Tyler Craig said on the podcast, Mark, when he's like, a lot of times you'll see these movements in Netflix, but it will be that the traders will come in and they'll start locking in profit, and it'll come right back down. And it came right back down within that expectation. You know, we were talking about iron condors and short strangles on the podcast. Netflix would have played out perfectly in that environment with either the iron condor or that short strangle. So I was just really kind of impressed with Tyler Craig's analysis from the podcast. So if you guys have not listened to that yet, please make sure you do, because it was spot on here in Netflix. I think you got to be a little concerned. And it's like I said yesterday, you know, with a market this hot that hasn't sold anything, you got to be a little concerned with a company like Netflix that has been underperforming in that environment. And that's kind of what we're seeing with Netflix. It's going to be a story that's going to play out, but that growing trend has to be very concerning for Netflix. Next company that reported earnings.
One last thing on Netflix.
Ahead,
if you think we're done with the Netflix analysis, tune into the halftime report on Monday when Tim will be back and I will be with him. There will be additional commentary.
I don't think that commentary is going to be based on analysis, though.
Oh no, it's going to be
I told you so.
No, it's going to be some adult, sophisticated version of nah.
Yep, there you go. IBM, guys, also reports earnings last night. They reaffirmed guidance for 2020. They came in, they beat the expectation, earnings per share, $4.71 a share versus the expectation of $4.69. Revenue came in at 21.8 versus 21.7. IBM, not a company that a lot of people trade. It's more of the old Mon Pod type investor class. The gap out on IBM, you know, obviously very positive, up 3% on the day. Mark, what's your read here on IBM?
Listen, once again, IBM, like if you're looking for the next hot stock that's going to climb to, you know, the stratosphere, you know, IBM's probably not your cup of tea. If you're looking for something that on a pullback, I mean, there's been a lot of cash flow stability with IBM going back, several years now, that those really significant dips probably should have been bought up. We should have probably been more excited for the stability that IBM, you know, IBM, it seems to have some stability from a price range. The earnings have been, I mean, once again, this is not a glamorous, oh my goodness, the next Uber, the next Facebook, the next whatever. But you kind of know what you're getting with IBM. And so when it has another solid, reasonable quarter of results, I haven't dived into all of the nuances of IBM's earnings report yet, but you know, the next time IBM has a pullback of significance, you know, maybe not the worst place to look for a potential cash flow stock.
Well, where I look at IBM is actually right around what just happened to earnings. It's got a gapping personality, even non-earnings.
You're looking at Microsoft right now.
Well, I am, and the reason because what you were talking about reminds me of Microsoft a little bit. And I mean, Microsoft in the 2000s, Microsoft was a darling of the market in the 90s, just a darling. But then Microsoft had, and what you're seeing is basically a lost decade. In the 2000s, missed out on the entire run. Just to know, Microsoft. We
all started trading sometime during this decade.
It was 05, 06, 07.
And we always it was like Microsoft's a cash flow stock. Microsoft's a cash flow stock.
Yeah,
Microsoft's a
it's
cash
boring.
flow stock.
It was boring, right? I mean, it was just like, just do covered calls on it, just capture a dividend. It literally did not participate in the same degree that the market did. But Microsoft had a great way of kind of reinventing itself to a certain extent. And then look at Microsoft in the next decade, right? Just an absolute just juggernaut that just literally never had a weekly, it never had really a weekly type bear market. It just never did.
If you were waiting for Microsoft to pull back to the 20 monthly moving average, you're still waiting.
Missed out. You're still waiting, right? I mean, that honestly, that it's been one of the best performing, most consistent stocks of the previous decade. I'm looking at IBM over the last decade, and I see a lot of similarities to what Microsoft did in the 2000s. Can IBM reinvent the wheel to a certain extent? Can it become more of a trending stock? I'm not saying it can, but it just, that what you were saying, Mark, just reminded me of Microsoft in the 2000s.
And that's a great thing. I mean, these big tech companies that have this huge infrastructure. I mean, would it be the most shocking thing in the world if sometime in the next 5-7 years, IBM captures a segment of some area of tech that it doesn't dominate today and start seeing growth in this new area of tech? And then, I mean, we've seen with Microsoft, you take a decade off of price, like the pent-up potential of a company that has that much infrastructure. I mean, it's, just something to consider if anything comes down the pipeline in future years.
Well, and also from a technical perspective on this weekly chart, you are starting to see some reversal characteristics here, where you see kind of a little bit of a head and shoulders type situation, where you have the left shoulder at 138, the head at 111, and then the right shoulder at 131. You have this neckline right here. When you're looking at those reversal patterns, you have this neckline right there. When you connect these resistance levels, that 50-period weekly moving average is acting as a pretty significant level of resistance for it. It's just something I think we should keep an eye on. I don't see there being a trade here yet, but I definitely see this based on what we saw with the market reaction to their earnings announcement. It's something that I think we probably should keep an eye on. Don't chase the dragon. The gap range is a little concerning. You probably will see a little profit taking here on IBM, but I think it's a watch list candidate, in my opinion. Next news today, let's take a look at Trump in comparison to the tariffs.
I was like, I don't know that stock.
No.
At one point, he did IPO his company.
Did he really?
He IPO'd and then brought it back private. So it was one of the times. He IPO'd one of his companies. It did fantastic in the IPO, and it was like 2 years later he took it back private.
I didn't know that. I'm going to look into that. Okay. The news of the day, the only news I want to talk about with Trump is based on tariffs, right? He did talk to the EU, and he did threaten the EU with more tariffs on automobiles and what did he say? Automobiles and other things. So that's something we need to keep an eye on in the future, but that's about it. Looking at the market here today, obviously just kind of a boring day in the marketplace. Mark, do you have any technical read here other than what we've already been discussing?
No, I mean, it's rinse and repeat the analysis for quite some time now. Strong trend, ridiculous strong trend. The sentiment on the market is uber high. I mean, how many pullbacks have we gotten to the 20-day moving average? One in the last
month and a half.
So like waiting for pullbacks to get in just hasn't existed. I'm actually scared if a pullback does occur, because then it might lose some steam. Waiting for those resistance breakouts, day trades, short-term swing trades. It's a stock picker's market for sure, and looking for those good individual company setups. Just a lot of strength. Now, you get a coronavirus scare yesterday, you get Trump throwing the trade war jargon today. Market doesn't care.
Doesn't care.
It just does not care. Those algorithms are working overtime right now. It's going to take something substantial to spook this market. It just is.
Well, and I think that something substantial is one of those variables we cannot predict here, Mark, because I don't think it's going to be an economic factor. in my opinion, because in an economic factor, I mean, this market, as long as the Fed's going to pump in $100 billion in QE and repo actions, I don't think the market's going to care about anything from a tariff, trade war, and economic factor. The Fed is number one, number two, and number three in this analysis. But it's kind of like when you talked about the pullback, Mark, the bullish retracement is my favorite technical setup in the marketplace. It's the one where you have the highest return for risk ratio. You don't have the probability that you have on a breakout, but you have a higher return, but you're not getting that. And it's like I said yesterday, this market reminds me of the 2013 market, where the number one technical setup in that market was the high base or the flag pattern. And that's what we're seeing forming here on the S&P 500. You break out, you base, you break out, you base. And so basically you're looking at that as a continuation. And for me, when I'm looking at those reports out of the stock and the options report, look at FE today, consolidation, breakout. Look at the home builders today, and home builders is XHB, excuse me. Okay. Consolidation, breakout, run. When you're looking at Garmin today, consolidation, breakout, run. And that's just what we're seeing in this market. Is the market will go up fairly quickly, it'll high base, and then it breaks out and it runs again. Let's switch into,
and if you are not a pro member, sign up for a free trial, because if you're not a pro member and haven't been using those scouting reports, you simply do not like money.
Those bullish trades in the scouting reports have been killers lately.
You simply do not like money. You refuse to add money. Become a pro member today. Seriously. Email me at Team at Tackle Trading. I'll get you set up with a trial. Go to tackletrading.com, go to the store, sign up for a trial, check out those scouting reports, make it part of your rhythm, make it part of your routine. The coaches who have collectively have, goodness gracious knows how much experience, collectively meet every week and put together a list of candidates from all of the stocks out there in the stock
It's market. Over 150 years of experience combined.
I was just about to say, I bet you it's like a century or two worth of experience.
It's 100. It's slightly, if I did the math, it's slightly over 150 years of combined experience. I mean, you're talking about people that ran hedge funds, institutional traders. You're talking about Keith King, who was a market maker on the Boston and the New York Stock Exchange floor, who has over 28 million transactions in his life. And so those scouting reports, Mark, when I'm not in the meeting, I'm watching those scouting reports on Sunday to prepare for the market that week. I work off those reports every single week, because even when I'm not there, I trust the fact that you guys know what you're doing, because we all trade similar systems, similar rules, similar analysis, because regardless of whatever technical system people are trained on, it's all based on the same foundation, retracements and breakouts and volume and indicators and so on and so forth. I do want to switch it up to the dollar very quickly, Cody, and I want to get
definitely going to ask you about the dollar, because I mean, we had a W, we had an M, and now I'm starting to see a head and shoulders type pattern.
So am I.
So I see 3 reversal patterns, which definitely makes me put it smack dab neutral until it makes up its mind. Well, but if we can break at that break line, I mean that's a quick, easy trade back to the previous resistance level.
Not only do have this reversal pattern here, you had the slowing momentum here, you had the increase in the pivot here, you've reclaimed all your moving averages, and now you're right underneath that resistance where you're confirming. I think a trigger above 97.75 here would have some fairly decent currency trades. The Bank of Canada also announced monetary policy, and basically they came in line with what was expected. I do think the dollar's setting up to be a little bit of a reign supreme here over the course of the next couple of weeks, if we can get that breakout at 97.75. So keep an eye on the dollar for you currency traders. Obviously, we don't trade the dollar index. We trade the pairs, the euro dollar cross, the US Japanese cross, the British pound dollar cross, and so on and so forth. But if the dollar does break out, there is going to be some opportunities in the dollar from a trading perspective, no doubt about that.
Hopefully the Fed can hold on to the last glimpse of hawkishness that once existed.
Yeah, good luck with that one. I'll wait for that one. I'll wait for that one. Not going to happen, Cody. This Fed has lost its mind. Listen, I'm telling you right now, if there's one thing I understand, it's unfortunately, I understand the Fed. Okay. when the Fed sets a standard, they don't take away that standard. It always gets worse. And it's like a drug addict. You got to have more drugs to get the same high. The Fed's got to have more money to get the same impact. I remember back in 2012, I wrote a newsletter, and I said, if the Fed is going to maintain this market bullish momentum, they're not going to have to pump 1.7 trillion of new QE. They're going to have to pump in 4 trillion of new QE, because Absolutely. As the price goes up, you need more money to have the same velocity for the price to go up. So once the Fed started QE, I don't think they're going to stop here. They've fully embraced modern monetary theory at this point. They've fully embraced corporate socialism at this point, and they're not going to stop. Now, I disagree with that in every single economic, political, and fundamental reason, every single one. But it's not my job to set Fed policy. It's my job to apply Fed policy in the marketplace, right?
Yep.
Oh, this all ends badly. There's no way it doesn't. But
well, that's why we own gold.
You know,
right?
Like, it just might not end badly for another 17 years. I mean, that's what, whenever I hear the doom and gloomers out there, the
dollar's not dying in my lifetime. I'm just going to put it like that.
You know, it's like, oftentimes I'm like, I agree with your general premise, bro, but that might not happen until I am in a nursing home. You know, like,
I don't think it's going to happen then. I think what you'll see is increasing inflation, but the demise of the dollar that people like to talk about, that is so dumb. I mean, think about it.
It's just silly.
Is every country in the world just going to kill their currency simultaneously?
Like, it's
right?
just.
And when you look at the central banks around the world, every central bank's doing the same thing. And when you're looking at currency and you're looking at these banks and you're looking at these countries and you're looking at the IMF and you're looking at the World Bank, there was a trade agreement signed with the IMF in October of 2015 that injected the Chinese yuan within the basket of the SDR. And although when you inject a currency into the basket of the SDR, all the other currencies have to take a step back. Well, guess what the dollar did? It actually increased its percentage of that basket in that environment. So the death of the dollar is not going to happen. It's not going to happen.
You know, and the overvaluedness, like every once in a while, I like to go to zerohedge.com, which is this doom and gloom. Everything
they're completely doom and gloom.
Doom and gloom. Everything's going to die. And I go to the message boards and I'll see stuff like, yeah, these people in the stock market, they're going to get what's coming to them one day. And just like, yeah, like I don't own stocks. That's just ridiculous.
And I'm going to get my cash flow until that day.
And I love getting on the message boards and messing with them. It's a little pet hobby of mine. You know,
this market
you put on your troll hat and you get in there.
Oh, I have so much fun with it, you know, because they don't want to hear facts. They just want to hear they want an excuse why everybody else making money is wrong.
Mm-hmm.
That's what they want.
True.
They just want everyone else is stupid.
Mark, it's because they missed out. It's because and quite frankly, it's delusional. It's absolutely delusional because they look at it and they're like, oh, because I failed to act or I failed to get education or I failed this. They can't take self-responsibility in this capacity.
No,
they have to blame somebody else. Right? It's like, oh, they made money because of this, random reason. No, your lack of education, your ignorance, and your lack of ability to take action is why you have not participated in a marketplace that's up 400% over the course of the last 10 years, and most likely will be up another 400% over the next 10 years.
It's just like, don't try to guess when the good time ends. It's like, I mean, are there things to be concerned about? Sure. That's why we have stop losses. That's why we have knowledge of support, that when support breaks, we take defensive action. Mm-hmm. When the bad thing comes a knocking, we got a million defensive techniques.
That's why we buy put options to protect long-term investments. And that's why we write call options to cash flow in that environment. And that's why we own gold to hedge against any economic calamity. Right? I mean, it's not like we're just buying index funds here.
No, I mean, we carefully monitor, pay attention to technical levels, trends, sentiment, all of these things. When those things shifts, we're all over them. Mm-hmm. We're all over them. But when the good times happening, like it's been for the last 3-4 months, like, don't live in a bubble. Don't live in a bubble.
Unfortunately, most people do live in a bubble, and they only surround themselves with this people of the exact same mentality and philosophy that supports their lack of action. Moving on to gold here real quick, Mark, is there anything that's happening today that changes the analysis on what our read on gold is?
No, same general situation.
Still waiting for that confirmation above 1565, still holding support at 1550. Let's just, be a little patient here and let that set up. Mark, crude oil coming down again pretty aggressively here today. We talked about it yesterday about, maybe a bull put spread here. And I was very adamant that I just did not feel that was appropriate. It reminded me a lot of what was going on in natural gas. Now we're down 3% on the day, really kind of breaking that trend mark. This is going to be fairly aggressive, in my opinion. What's your read here?
Yeah. Okay. Now, once again, I'm starting to get excited about entering into oil positions. And you might say, oh, that's crazy. I'm not excited today. I'm not excited tomorrow. I'm not going to be excited next week. What we want to see is if you go back in time to like that stability pattern that formed at the start of October, you had a big sell-off. And go to the daily chart. It'll be better illustrated.
I was just getting the support zone.
And then you had it base there. You have multiple tests of support, and then you start climbing over moving averages such as the 20. Like, when price falls, we want to do two things as a bottom feeder. And when I use the term bottom feeder, I refer to someone like myself who loves it when a commodity or a stock that they've been eyeing gets beat up, comes to a lower price that they can potentially add, boomerang style trade for a portfolio. Now, while it's coming down, we don't want to catch a falling knife, a term used to describe a situation where there's a lot of negative bearish momentum. We want there to be some kind of stabilization pattern form, ideally near the support level, like it did last time in early October. That early October pattern is what we would love to see form. And then I will be all about scooping up some shares of USO to add to a long-term position. I mean,
the only time you catch a falling knife is if you have a net worth of 10 figures.
No, the reason they have a net worth of 10 figures is because they don't catch a falling knife.
Well, so there was one time that great Warren Buffett, but of course Warren Buffett does more fundamental analysis than anyone else.
That's different. He plays by a different set of rules. Right? It's not like
someone asked him, they're like, why'd you catch a falling knife? He said his response, because I can afford it.
No, that was a lie, Cody. The reason he caught that falling knife is he gets paid 5 times the dividend that other investors get paid. And so when Bank of America was falling down and dying, Bank of America came in and said, okay, Buffett, if you come in with a couple $1 billion, we'll pay you a 10% dividend.
Well, the one that I'm talking about was when he was buying railroads.
Well, and quite frankly,
he was like, I liked him at 45 because my analysis said it was a good price at 45.
Again, I want to be clear on this. The reason Buffett catches a falling knife is when Buffett goes out and says, I'm going to buy something. What does everybody else do?
Hey, then buy it too.
Okay. And so it automatically puts in a bottom. So there is zero scenario where people not named Warren Buffett can catch that falling knife. You got to wait to let that hit support, slow its momentum.
Oh, absolutely. I would never let a student catch a falling knife. No, that was not. I was really just trying to make a joke.
But, looking at crude light right here, this thing is a falling knife right now. The similarities to what happened in October are just full of evidence, right? There's tremendous evidence of oil contracting back down into the 52 to 50 range. I think we should get excited for oil, but I only think we should get excited for oil at this point if we get that double bottom at 52, 52 and a half, somewhere around that level. And then we can come into USO and bottom fish it at that point. But because Mark, when I'm looking at this, paint me a bullish case to where anybody should buy other than if it double bottoms at 52. Is there any bullish case here?
No.
I mean, what would have to happen?
That's a break of short-term support.
But even if it goes back above support, you're not buying.
No.
Even if it reclaims the 20-period moving average, you're probably not buying because looking left of
for trade setups. We wait. That is what we do as traders. We don't guess. We wait for setups to occur. I mean, you know, it's funny is we can pound this down people's throats time and time again. And I'll still hear people say, well, I think.
I don't care what you
think.
No.
Stop thinking.
Your head is not better than the market. I can promise you that.
We as traders, we wait for trade setups to occur. And when trade setups occur, then based on the setup, we take action. So the only setup that's occurring today is a day trade, swing trade to the downside. That's what's set up today.
Quite frankly, that trade's already done, right?
Yeah,
I mean,
it's over.
Day traders have cleaned up. Day traders have cleaned up that profit today.
Yeah, that trade's over. So let's keep an eye on this every day, guys, as we always do.
Go intraday real quick. You'll see them cleaning up, taking that profit from there.
Oh, I guarantee it's slowing its momentum already. Right? See the breakdown of support right here. Look at it pick up momentum. Look at start to subtly shift its momentum as it comes into support.
Yep.
That's the traders who are shorting, locking in their profit. That is not investors and traders buying oil. That's just them closing their short trade, no doubt about that. Moving on very quickly here. Let's take a quick peek at this natural gas.
I was going to say, you can't skip natural gas. That's a big break that it had yesterday. And
this is untradeable to the bullish side. Would you agree, Mark?
Look at the 20-day moving average. The 20-day moving average is the next signal that is going to be required to enter into a new leg of a adding position. Once again, excited whenever a commodity comes down. I always will, because guess what? In the history of commodities, these things have a tendency to be really good deals long term when they get beat up. I mean, go look at any commodity chart that's been beat up over the last 25 years. And these cycles that occur in commodities, that when you get these prolonged beat ups, guess what? They end up being good deals, because that's the nature of commodities. I'm already reading reports of US companies scaling back natural gas production in 2020. Because guess what?
Now, Mark, go on that, because that is why commodities bottom out.
That is why they bottom out. Because guess what? When things get low, you put less money into production. You put less money into development. You close down some production. And that's the nature of the cycle of commodities. And so I'm always excited when something like this occurs.
Mm-hmm.
But once again, we're traders. We wait for patterns. We wait for signals before we take action. I can be excited all I want. I can go on the cycle of commodities for hours and hours and hours, and you'd be like, yeah, that's right. We could go look at charts for hours and be like, yeah, that is amazing. I really want to get in. We still wait for the signal.
There's a reason that crude oil over the course of the last 2 years, when it comes into that 50 to 52 range, has a tendency to bottom out. And some of it's due to significant whole numbers at 50 and, patterns that have developed at that level. But it's also the realization that, the market knows that what those oil fracking and drillers do is under $50. They're not profitable, and they're going to shut down production because they're not profitable in that environment. And I don't know exactly what the level is on natural gas where the frackers aren't profitable, but I'm willing to bet they're losing money under $2.
Probably are.
I'm willing to bet. And it's not like, Mark, they shut down all production. All they do is they leave the drills there. They leave the pipelines there. All they do is send the roughnecks home. That's it. They just stop the drilling process. And then when that artificial demand comes in because of the supply is sucked out of the equation, and commodities have a tendency to consolidate at those price thresholds, and then they start to go up and up and up. But there's also an artificial ceiling on oil and gas and those types of products as well, because once oil gets into $70, Mark, what does Russia do?
They start increasing their supply.
They flood.
Jack up
they start flooding the market. You want to sell your barrels at 70, not 50.
Well, and guys, it's the same thing. I'd rather sell my stock at 70.
Yeah, that's exactly what it is.
I mean, Cody, on Starbucks today, I want you to explain this trade on Starbucks, because I think it's a really cool trade here, Cody.
All right, so Starbucks had been on a watch list ever since it high based about a month or so ago, and it continued to hold that base until it finally started looking like it was going to break out. It tried twice. And then after that, that's when on that second time, I took it more as a smaller flag. So I took the trade, and my target was 95. And right today, I see that it's struggling to get through 94. Earnings are next week. So I got a lot of things that to look at here. Earnings are coming up. I'm not going to just hold this bullish trade I have through Starbucks. So different options you have. I could buy a protected put option to see if it continues up to that 95. But that's also going to, take a little profits off in order to invest in that put that I'm trying to get from the extra dollar gain that I'm going to get from the movement. Second option, which is one that, I asked you this morning, Matt, which is the one I went with, was, what if I just take some profit right now? And I took profit, and now the positions that I hold on Starbucks is zero risk. I have no risk in the trade because I took half of my position off, which paid for the other half. So now I have a trade on Starbucks with no risk. Actually, there's $15 in it that even if it goes against me, I made $15.
So basically what he asked me earlier today is when we were in the pre-production show, and he says, "Hey Matt, can I get your read on Starbucks?" I'm like, "Yeah, what's up?" And he's like, and Cody says, "Well, I can just close the position right now. I can hedge against it, or I can scale out of it and have a risk-free trade." And I said, "Cody, the entire philosophy of traders to have a risk-free position." And so what Cody did is, he took a couple contracts off it, and now he has a risk-free trade that if Starbucks has either one, if Starbucks breaks out and runs before the earnings, or two, he actually can hold through the earnings on that long call, because even if Starbucks gets absolutely blasted, it doesn't matter because he locked in profit on the rest of the trade. I just felt it was an absolutely fantastic trade. Guys, that's all I really had for the market today. Other than that, it's a fairly boring day. Keep an eye on those breakouts. Those breakouts are going to be legit. Work off your scouting reports. If you're not a pro member of the tackle trading community, guys, just ask any one of our pro members. In fact, I'm just going to read you guys. We got a 5-star review from Trustpilot just earlier today, and I just felt like it was just an awesome review, because it really does reflect what we're trying to do within our community. And James Sullivan sent us this on Trustpilot. He says, "Tackle Trading is a group of honest people that really care about helping others succeed and creating a better life through trading and investing. They put new content out all the time, and everything that they put together is quality. There is so much to learn, and they make it easy to understand. What it comes down to is they have the integrity, and they are always striving for excellence." Guys, we are a community of traders, like-minded investors, and we all come together to form this amazing community called Tackle Trading, so that we can all navigate this market together, because quite frankly, there's so much data out there. There's so much opinion out there. There's so much nonsense out there. We'd like to be real. We'd like to be legit. And if you guys want to be a part of that community, email team@tackletrading.com. You can go to tackletrading.com and get a 15-day free trial to test out what those scouting reports are all about, to test out what our coaches shows and our traders lounges and all of that content is all about. Because if there's one thing we value at Tackle Trading above all things, it's putting out quality content that can be easily digestible by our community. So guys, get over there and become a pro member of Tackle Trading. And with that, we are out.